Hello and welcome back to the show. So I am super excited today to be sitting here with my guest, Beth Underhill. Beth is a real estate investor, a serial real estate investor who is involved in over 500 multifamily units in her investment portfolio. And also on top of that, over 126 student housing beds as well. She's also invested in out of the country properties in other countries and global real estate investments like hotels and other redevelopment projects like such. So there's definitely a ton of value and a ton of experience to be drawn from our guest today. But without further ado, I want to welcome you to the show. Welcome to the show, Beth.
Thank you so much for having me. Glad to be here.
No, absolutely. I am very honored to have you on the show because of the wealth of knowledge and experience that you have in real estate. But I understand that everybody in real estate starts somewhere. So I would love to, if you don't mind, get your background and share a little bit with the audience, if you don't mind, how you got started in real estate and how did you get to where you are today, where you're doing over deals overseas and everything like that.
Absolutely. So I've always been a serial entrepreneur, kind of diving in and getting my hands dirty in multiple things. So it was no surprise that eventually real estate sort of found me. Um, I go back to sometime around in 2006, I believe it was, that my husband and I had actually contemplated buying a real estate franchise. It was, and you might be familiar with it. I don't even know if it still exists, but it's called Help You Sell. And it was one of the first franchises, or I should say, real estate like brokerages that would help sellers put their listing on the MLS. And they would only have to pay a fee to be on the MLS, and they would not have to worry about then the buyer's agent fee and so forth. So we had actually contemplated investing in that and having our own franchise, but then we opted against it, and I'm glad we did. It worked out. It worked out for the better. I think it, especially just given the timing, 2008 and so forth, and the crash. Who knows what might have transpired at that point. So needless to say, fast forward to about 2018, and my husband, who struggles with his sleep, happened to be awake one evening watching infomercials. So he came across this one, and it was, "Hey, we like to do fix and flips, and we're coming to your town right now." And so he signed us up for this event. And I'm sorry, can you hear my dogs barking in the background?
Yeah, just a little bit.
Okay, I apologize about that to all the listeners out there. We have four puppies, and apparently there must be, it's usually either the FedEx, the mailman, or Amazon that they're delivering something. So, anyways, he signed us up for this event, and I call it the one day wonder. So we end up going to this event. It was free. Spent half a day just being, kind of sold on why we should be flipping houses. And so that led to a 3 day event. It was a weekend long event. We paid $997 for a weekend long event that led to a 5 day bus tour out in California, where they were going to take us around and show us all of these amazing properties, how we could actually get involved in flipping houses, how to, assess, the ARV, repairs, and so forth, the whole 9 yards. So we go through all of this, and of course, we pay for this education only to come home. And I mean, we immediately immersed ourselves into it. However, I think part of the problem was we were doing so much networking at this event that we forgot to listen to some of the do's and don'ts that, went along with flipping houses. So we ended up with two houses right off the bat. And that was one of the don'ts. If you're starting off in flipping houses, do one first. Don't do two at the same time. And we weren't doing two that had maybe 20 or $30,000 budgets. We were doing two that had 100,000 plus budgets, each of them. And so, needless to say, we were taking on quite a bit. And we also, at the same time, we own and operate an outdoor living space construction company. So our whole just our busyness was, at this level that It was kind of crazy. So we opted to hire a construction, a general contractor to help us with the two fix and flips. And that was a mistake. Another mistake that we, did not pay attention to with this education. And they, we were told, hey, don't use the same contractor on two properties if you're doing two properties at the same time. So needless to say, I mean, we were starting off like not on a very good foot. And we ended up, in a lawsuit with this particular contractor. We had to get a restraining order against him. It was a very ugly mess. But needless to say, we managed to, of course, get these houses to market. They sold for a pretty penny. We were very excited about it, but we just took too long to actually go through the process with them. And that's where sometimes you lose your money, right? If you're holding on to the properties, all of the costs that add up and so forth. So needless to say, we're gluttons for punishment. So we decide we're going to continue doing more. And so we go back and we start doing more. And this time we had more success. We learned and we made all the mistakes that you could mistake on, could learn, I should say, on those first two. And we had much greater success. But once COVID hit, our outdoor living construction company that we've had for 24 years, it just went berserk. We were already consistently busy, but now that if individuals, families, friends, if you wanted to gather, you could do so, but you had to be outside, right? So the only way that they could do that, everyone's home, they're looking at their outdoor space, they're looking at indoors, outdoors, they're like, hey, we want to freshen this up, we want to do something. So our outdoor construction company just went wild. And it was at that point that we decided, what, there needed to be a pivot. We couldn't continue down the same path of, fixing and flipping and also building these outdoor construction these outdoor construction spaces and be able to do all of it successfully. So I opted to then pivot into the multifamily commercial space. And, I was still able to manage all of the things that I do manage for our outdoor construction space. But, I was able to be in front of my computer more. I was able to kind of handle and take on so many more things other than if you're fixing and flipping, you're on site, you're running around to Lowe's, Home Depot, the tile store, this, that, and the other thing, maybe fetching things for contractors, hey, we're out of this, can you go grab that for us? So needless to say, it definitely was a better move for us all the way around. And it actually allowed us to get involved with, a multitude of different asset classes. And, right now it was funny because as you were talking about, the number of student housing beds, now it's closer to 500 student housing beds as opposed to 126. And, as far as multifamily units, I think it's over 800 multifamily units now. So the business has grown and I'm excited about, what that means for us, especially in the future. I'm a general partner on all of these assets, so I'm not on the side of the limited partners who are receiving the distributions. So my kind of fruit, so to speak, comes when either we refinance and we finance out the investors or we actually sell these assets. So I'm excited about my future 3 to 5 years from now. And I'm just going to continue to build and grow. And yes, I do own equity in a hotel in Panama, Central America, and I'm working on a second hotel in Antigua.
Wow. Wow, that's awesome. So again, like for people who are listening to this, right, who maybe are starting in investing or maybe they're flipping right now, I think you can learn a lot from, your story, which is you decided to pivot away from the flipping side of the business into more, I'll say a little bit more passive side and more
Mhm.
wealth building side of the business. So what was that transition like? And I guess what advice would you give to somebody who is maybe now currently working in a more active role or their business is a little bit more active as far as doing more fix and flips and single family properties, and they want to level up into multifamily or different types of asset classes?
Sure, I would say the first thing is start to do some research, right? Understand the various asset classes that are out there, which ones that you might gravitate towards. Um, I myself never thought I would gravitate towards student housing. However, this one particular group that I'm aligned with, we have an unfair advantage in the student housing market. One of our partners, he actually spent over 17 years with Landmark Properties, which is one of the largest student housing property management companies and developers in the country. So he has a pipeline of deal flow coming to him with all of his broker relations and just people that he's known in that industry over the course of 17 plus years, right? So I never thought I would be in that space, but here I am now, and I absolutely love it. But I would say then to anyone looking, definitely start to do your research on asset classes. Understand what a syndication is, because there's a lot of deals that out there that are syndicated. So you want to know more about, what that looks like, how you might be able to get involved. Network with other like multifamily syndication, syndicators, operators, and so forth, and just really sit down and ask them questions. Ask them how they've gotten started. What is it that they needed to do. You can always do smaller deals in that space, joint venture with individuals. So networking is always going to be key, because that's where you're going to find, in my opinion, just your next partners, your next deals. You name it. Your cash. So all of that. So for anyone considering, I would say maybe look up if there's meetups in the area, if there's real estate events, and you can always find real estate events in Florida related to multifamily. Attend some of those, and just start to you know get your feet wet, ask the questions before you jump in. I jumped in with 2 feet, which I think that's just who I am. Sometimes I wish I would have done a bit more research, but it is what it is, and I'm here now, so I'm happy that things worked out the way they have.
Right, and that was actually what I was going to ask next. Was when you started out in the flipping space, right? When you were doing your first two flips, you mentioned there was a lot of mistakes that you guys made, and there were just a lot of stress kind of on flipping those two first houses, and you were able to get through it and even create an entire career in real estate that was very successful and continues to be very successful today, even with those mistakes. So I guess like when somebody is starting out, would you go back and would you tell them to kind of do the same thing that you did and just really dive right in and just embrace, the potential of failure? Or would you kind of go back and maybe take a little bit slower and, not make those mistakes? So what would you say is the better opportunity cost for somebody who is starting out? Is to jump right in and just embrace the failures, or maybe take a step back and take it a little bit slower one by one?
Um, well, I think, so I think you have to find that happy medium. I think it's kind of a combination of you have action will always yield some kind of result, whether it be good or bad, right? But I think in hindsight, I wish we would have just focused on one property, not two. I think that the mistakes would not have been nearly as significant, and we would have been able to just kind of enjoy ourselves more in the process. um, Jumping in, you can get into trouble when you jump in too quickly, right? And it can be very costly, and if you don't have that money to lose, then I would definitely not suggest jumping in. So in hindsight, yes. Should we have slowed down? Absolutely. Should we have only done one property? Should we have paid more attention to the classwork versus the networking? Probably so. So I wish I would have gone at a slightly slower pace versus the pace that I went at and jumped in. And I think that's what ended up allowing me to have more success in the multifamily space, is because I did take it slower. I attended a couple of multifamily workshops in July of 2021, I believe it was. I did not start, really jumping in and doing deals and aligning with people until the end of 2021, beginning of 2022. So, I took a good 4 or 5 months or so. I was on the phone all the time, talking with different operators and really just trying to understand, okay, who do I like? Who do I align with? What area of the country are they in? Is it an area of the country I want to be in? Do I necessarily want, if I'm in, in the Midwest, do I want to have properties that are on the West Coast? Probably not, because I don't want to have to, hop on a plane and worry about a flight that is, going to put me in a time zone that is, a 3 hour time difference, right? If I can hop on a plane and be somewhere in, an hour and a half, that's a different story. So, all of that, I just really took that step back into the multifamily student housing space. And I'm glad, because it definitely has worked out to my advantage.
Right. So one of the things that, you hear a lot of people say when it comes to, getting into multifamily, especially in the syndication space. And so you are a general partner in all the properties that you currently involved with. A lot of people will actually suggest that you start out by being a limited partner first and just simply investing and, being a passive investor in one of these syndication properties just to see kind of how it functions, how it works, kind of get a behind the scenes look. Was that something that you did? Was that something that you considered? And if not, is there a reason for that? And would you suggest people taking a different route than maybe starting out by being a passive investor first?
I did not go that route. So I did not invest as an LP. So I wasn't on the passive side. And, I know that a lot of people suggest that that's what, you should do when you first start off. I guess it all depends on your timeline. If you're okay, maybe investing as an LP first before actually getting into a deal, you're looking at maybe a year or so before you can really see the full picture of just what exactly goes on with an investment and what happens behind the scenes. And, as an LP, I'll be honest with you. I mean, we host calls and Zooms and webinars and so forth for our LP investors, and they get to hear what's happening about the property, but they're not really actively managing it, the asset itself, or they're not really dealing with K1s, for instance, or all the legalese that comes along with a property. So from that standpoint, I've always found that kind of that tactic or that strategy interesting, because I just never really know what is an LP learning, so to speak, in that year's time, other than receiving maybe monthly reports, quarterly reports, and then maybe a semi-annual or an annual meeting, with the general partners. So for me, I have always found that I learn best if I'm on more of the active side, so to speak, and kind of diving right in. But I will say this, I did have experienced partners. And I think when you have experienced partners, that certainly helps out in terms of, my learning curve relative to someone else's learning curve, in which they might, maybe a group of, 3 or 4 people who have zero experience have partnered up together, and they have a much larger learning curve than what I ended up having. So
Yeah. So I think for a lot of people out there, right, when they're thinking about taking a different route to start being a syndication investor as a general partner, and they do choose being a passive investor, it could be because of a lot of I will even say procrastination, paralysis analysis, maybe just trying to feel like they're part of it without being actually a part of it and taking action. For the listeners out there, Beth is definitely somebody who takes action takes action very quickly and a lot of action as well. So there's something to be learned about that, right? Because you're very successful, and I would say probably in a pretty, a quicker timeline than most people will think as far as scaling up your portfolio to as many properties as you currently have now. So, you brought up the point of partners and having experienced partners. So I kind of want to go back to that a little bit here. Let me just kind of get your take on what exactly were you able to do to, essentially align yourselves with some of these more experienced partners? Because I think for investors coming in, maybe they're experienced in a different asset class, maybe they're experienced in real estate in a different way. But for them, they don't necessarily, they're jumping into, syndications maybe for the first time, or maybe they're jumping into student housing for the first time, and they don't have experience in that realm. So I really wanted to kind of get your take on what was it that you thought that you were able to offer your other partners that in order for them to see it as a reciprocal value where, they were able to also partner up with you. even though you were newer to this specific, asset class of real estate?
Yeah, that's a great question. And I get asked that quite a bit. Like how is it that I ended up where I'm at? And really it was number one through networking, and number two, um, just honing in on what is it that I can offer, and then talking about what I can offer. And so, I happened to be at a networking event. It was real estate related, all about multifamily. Three gentlemen who are my partners now were forming a new entity. And I was talking with one of them at the bar one evening, and we were having conversation. I shared my history of just all of the multiple businesses that I've been in, have started. So he clearly saw that, okay, she understands like what small business is and how to start. And really, a syndication, if you have, a partnership, whatever, you're running a small business at the end of the day. I mean, that's really what it is. So, so he introduced me to the other two partners, and they were like, well, Beth, what do you think you could do to help us out? And I said, well, I can build a website. I could help you with logo and branding. I can help out with investor relations and anything related to that. And they were like, sold. Okay, done. Here I am involved. And shortly thereafter, they give me 10% of the company. I'm like, woohoo, this is awesome. So needless to say, I mean, I think there's a place for, and I will say this, and especially for females out there, investor relations is one of the most crucial roles, and taking care of investors, from communication. I mean, answering emails, if it's, K1 related, if it's property related, getting them to even wire funds. That is something that, I really enjoy doing. And it's just managing, these individuals, who say, yes, I want to invest, and getting them to the point of, okay, let's get your documents squared away, let's get your wire, and then from there, let's keep this relationship going so that you look at our company, and I am a reflection essentially of what it is that we're trying to portray as a company. And so I think that there's definitely opportunity. They typically, it's kind of like broken down into different, like if you're a capital allocator, investor relations, asset management, underwriting, market analysis, and so forth. Those are the 5 or 6 different areas that, people can bring something to a particular partnership. So I think, when you can figure out like what it is, what your skill set is, what you're good at, then you market yourself and you let people know. And sooner or later, you're going to find, if you're networking enough, you're going to find a group that you align with, or maybe it starts off as just one person and then you build from there.
Yeah, I think what you just shared there was very valuable for people who wants to get started in a project that may seem a lot bigger than what they're used to. Because, if you think about it, right, for most people on the outside looking in, if they wanted to, be a part of a syndication project, they think they have to know, everything there is to know about, procuring the property, managing the property, actually, just analyzing the property, everything that kind of involves with like what to do with, actually managing a multifamily property, right? But what you just said right there was you got started by involving yourself with a group of partners who were experienced in that realm, but you were experienced in a different realm where they weren't necessarily as experienced in, which is the investor relations, the branding, right? The actual, part of the capital raising process as well, and actually getting people, to put their money into the project and help manage them throughout the entire duration that they're invested in there. So I think that's very important for people to see that, because I think that a lot of people have specific skill sets, but they don't necessarily know how they can apply it to, a syndication project or a real estate, like a real estate fund or something like that, where they're able to really shine with their skill sets. When it might not seem like it has anything to do with real estate, but it really does, right? Like you mentioned, it's like running a small business. So I
Mhm.
think that's very important there. And I just kind of want to, get your take now. I mean, so that's kind of how you started. Is that where you are kind of focused in right now, just specializing in all of your other projects too? which is the investor relations and the marketing and the branding, or have you kind of taken on a bigger role as you have now scaled up into your own projects and different things outside of, your first couple syndications?
Um, so I would say within the syndication space, so not only am I investor relations, but also I've taken on the role of legal and compliance. So, which I don't know that I want that role, but I have that role. And sometimes it's just by default. No one else wants to pick it up. And I'm like, okay, wait a minute here. We need to make sure we're above board on everything that we do. So from that standpoint, and you know what, I feel very blessed because I've learned things that I would not know otherwise. And so, and then being able to pass along that knowledge and information and then just know like, hey, we're doing something right or we're borderline doing something wrong. We need to think about how to go about this differently. So I'm excited about that. As far as any of my investments outside some of those syndications, for instance, we're looking at a hotel in Antigua, and that will be a full blown myself, my husband, and a couple of other partners going in on that together. And each of us will have our own specific roles, but having run a hotel previously in my previous life, operations is going to be something that I will definitely oversee. And as far as a hotel, I'm certainly more versed and comfortable in running a hotel than I am in overseeing a multifamily or student housing property. So they're two different animals. But just because, I mean, with a hotel, I think there's just more interaction from a customer service, client service, standpoint, and that's where I tend to excel. And I think that's why from the standpoint of investor relations, I think that's why I've enjoyed it so much because my experience over the course of 20 plus years just being in the service industry has lent itself to me being in front of people all the time and taking care of them.
Right. Yeah. So again, you're kind of looking for different ways where you're able to, insert your value, right, and your skill
Right.
sets into even different projects. You're just doing it in a different way,
Right.
right? With a syndication with a multifamily or student housing, it's investor relations. But on the hotel side, it's that and also the operations side, right? Because it's also, managing the customer relationships with people who are, going to be staying there as well. So I think it's very important for people to kind of think about as where they can insert their value and how they can do it creatively. So you did mention a little bit about, getting into the student housing side, and we talked about getting into the multifamily side as well. But I'm really curious, just personally, on, how, what was the idea in getting getting under contract on a hotel outside of the United States, right? So what does it take, and what was the idea behind investing in properties outside of this country? Was this something that you were looking to do? Is it more stress or less stress than investing in the US? I think for a lot of people that might be helpful to hear on as well.
Absolutely. Really the idea behind it was to have a place to go to that was warm and sunny. I mean, truth be told, but aside from that, no, post COVID, a lot of the hotels, smaller boutique hotels, especially in the Caribbean, there was definitely an opportunity there, and there still is because you had owners who were tired. They were kind of like, hey, we don't want to go through, something like this ever again, where our entire business was, virtually shut down within a matter of days, right? I mean, I know that happened obviously here in the United States with certain industries and so forth, but with travel and no one on airplanes and heading to places like Antigua. So what we found was that there were a ton of opportunities, and just in researching opportunities, we happened to hone in on one that we just, we really fell in love with Antigua. We love the blue waters. There's 365 beaches. You can go to a different beach every single year or every single day, excuse me. And the property itself is it's very it reminds me just of some Italian villas. So I fell in love with just the look of the property and what that was all about. So, just, I mean, just amazing, amazing, amazing. opportunity that we're just extremely excited about. And excuse me, my dog is howling. And so, just with that, we're just running with it and seeing what happens. It's doing quite well post COVID, from a financial perspective. And so, we think, okay, well, we have this opportunity. The owners are tired. They're ready to move on. So why not? Why not take this on and that be someplace that we end up just retiring to?
Yeah, that's actually, I think, for a lot of people, one of the reasons why they do invest in international properties, and for a lot of people, why they invest in Airbnbs outside of their state and outside of their, outside of their immediate, kind of local area as well, is they want to have kind of like a vacation property or like a vacation option, right? Like you said, someplace warm and sunny to stay, as in their investment portfolio. So I think that's really cool for a lot of people to kind of consider is that when you are at a certain point in your real estate business, in your real estate career, you can now start considering how these properties can even serve, you yourself personally, down the line into the future. So I'm guessing like, was that like how big of a consideration was that when you guys were looking into this? Was this, was it 50-50, or you guys still looking at it from more of a business perspective and that just being a bonus? Or is it even, more so of it being, you're looking at it from this is going to serve us personally eventually, but it still makes a business as well. So I guess like from the two sides of looking at an international property like this, was it more so of a personal consideration or a business consideration?
Say it's 50-50, to be honest with you, because obviously if the business isn't doing good, we wouldn't worry about it from a personal standpoint, right? But the property itself is operating very efficiently. It's doing well. It's got an incredible NOI. So it presents this, okay, so it's doing well. So this is a good business to buy. And it also will allow us to have this place that we can go to and from. And I think you have to, you do have to like the place that you're going to, right? So if it were, in an area that, hey, I have no desire to visit it, that frequently, I wouldn't even consider it. But we really love Antigua, and I mean, it's an easy in and out. They've just built a incredible airport. I mean, it's relatively new, so it makes it much easier to get there. But we see it as, a growing market, and yes, someplace that eventually we can just, maybe 6 months out of the year, we're down there, and 6 months we're here in the United States.
Oh, wow, that's awesome. I think a lot of people want to have some similar to that in their lifestyle and the options that you guys have there. But Beth, I just want to thank you for being on the show today. I feel like you shared with us a ton of value just from your experiences and the lessons that you've learned in your career as well. For people who are listening to this that either want to learn more about you, what you do, and follow your journey, or even potentially invest with you into the future, what are some of the best places for people to follow you or to just kind of stay along with your journey?
Absolutely. So you can go to my website, investingwithbeth.com. You can always sign up for my newsletter there. Or you can follow me on YouTube, TikTok, and Instagram, with my handle at investing with Beth.
Awesome. We will make sure to leave all of those links in the description and the show notes down below. But other than that, Beth, I want to thank you again for being on the show. Before we let you go here, is there any last tips or pieces of advice that you would want to leave with us?
Sure. I would just say that if you are considering real estate and are looking to build generational wealth, massive action will solve that. So just take action. Don't sit on the sidelines. Don't wait for tomorrow, or think that, maybe you're not in a financial position to be able to get involved. Just go do it. I feel like I'm a product of that, not necessarily being in the best financial position when I first got started in real estate, but I feel like, just turn things around and it's possible.
Awesome. That was great advice. And Beth, thank you again for being here and thank you for tuning in. And we will see you on the next show. Take care.
Bye bye.